All right. Um, welcome everyone. Welcome everyone. So, one of the major problems a lot of we traders have is identifying the direction of price. All right, the direction of price. And there are instances whereby traders do this thing, they try to buy to sell or sell to buy, and it's not reliable. All right. It just shows that um, you don't have a particular sense of direction of a particular pair. You don't know where it's coming from. You don't know where it's going to. Okay. You're just, trading patterns. Do you get? You're basically just trading patterns. And that's not what trading is all about. Okay. This will leave you in financial ruins. I keep saying this. Do you understand? It's going to leave you in financial ruins. So the first thing first that you must understand is what price is trying to tell you. All right, which we call storytelling. Okay, storytelling. Now, what does it mean? It means wherever you see price right now, wherever you see price right now, it's always coming from somewhere. Okay, it's always coming from somewhere, either from the upside to the downside or from the downside to the upside. You can't just see, price didn't just appear on the charts just like that. No. Okay, if you see price ranging around somewhere like this or wherever, it didn't just appear here. It didn't. It was probably coming from a sell trend, right? Or an uptrend. Heading to where? A particular direction or heading to a particular direction to the downside. Okay, so you must be able to tell where price is coming from and where it's going to. Are you following? Now, how do we tell where price is coming from and where price is going to? Now, you must understand that there are two major factors that must be considered. In the previous class, we talked about market structure. All right. It's how to identify, your structures that gives you your sells and your buys. But now we're talking about, top-down analysis. All right. How do you identify where price is coming from and where price is what is going to? That's where we have the major factors that must be considered. The two major factors, actually, right? Factors that must be considered when doing your what? Your top-down analysis. I love teaching this topic a lot because this is one of the major areas traders have, they have challenges in. You get top-down analysis. Now, what are the two major factors that must be considered when doing your top-down analysis? Number one, we have the starting point, right? And number two, we have the finish point. Now, what is the starting point and what is the finish point? So based on the system that we trade, the algo market structure, the advanced market structure, we all know that if we want to take a sell, right? This is what we're looking at for. A sweep of liquidity, right? A break, retracement, and then a break, correct? And then this becomes what liquidity to be taken out like this. So when price comes into the zone, what are we expecting? We're expecting price to do what? To sell off, to continue to its direction to the downside, correct? Or if it's a buy scenario, a sweep, a break, and price comes back to take out the liquidity and then continues to the upside. All right. Now, these, as you see, gives you a trend. Let's imagine this is the 1 minute time frame. The 1 minute time frame. How long do you think price is going to take to sell from here to here? Price could take a couple of minutes. Price could take 5 minutes. Price could take 30 minutes. All right. Price could take an hour. But let's just say 30 minutes. Do you understand? Let's say 30 minutes. Now, imagine this is the monthly time frame, right? Imagine this is the monthly time frame. How long do you think price is going to take to sell from here to this point? Price could take years. All right. Price could take years. Price could take months. Do you understand? So what does that tell you? That tells you that you already have a trend. All right. Following the system that you trade, imagine you're taking a sell from here. This becomes your what? Your entry. Correct? That becomes your entry, and then this becomes your what? Your TP. You already know for a fact that this is where price is coming to. So all you just have to do is what? Keep looking for what? Sells, sell, sell, sell opportunities till price gets to where? To its target. So your entry becomes your starting point and your TP becomes your what? Your finish point. So what's the point of looking for buys when you know that price is bearish and it's going to keep going to the downside till it hits its target? Do you get my point? So if you go on the chart, all right, if we go on the chart, let's take for instance, we have this particular pair, Crash 1000, right? I've taken multiple sales on Crash 1000. And let's see why we took a sell. Now, remember I said we have, starting points and finish points as the major factors. Now, what is considered the starting point? Your starting point is the point whereby price took out a major liquidity in your algo structure on the higher time frame. So what I use the daily time frame, I use the monthly time frame, I use the weekly time frame, I use the 4 hours time frame to identify my trends, my structure. All right. So how do we point out the starting point and the finish point? Now, you notice that we had a swing sell all the way from here. And what did price tell us? Price told us that we had a structure here. We had a sweep of liquidity. We had break. We have liquidity right here, which was taken out. Correct? And then we had a target here. So which means on the daily time frame, Crash 1000 has to sell from here to here, this point. So it has to come to here, 4655. No matter how long it takes, it has to come there. When did price take out liquidity? Price took out liquidity on the 14th of August, which means we have a starting point here. This is our start. All right. And where's our finish? This is our finish point. Am I making sense? So this is where price has to come to. So you don't have any business looking for buys on Crash 1000. Now, like I said earlier, the Reef has, tweaked the algorithm a bit. And for those of you still trading the 5 minutes time frame, it's not so advisable. Do you understand? It's not so advisable because now there are instances whereby you might have a particular sense of direction of a pair. You might know where price is coming from and where price is going to. Correct? You know that okay, Crash 1000 is bearish. It has to sell because it's going to what? 4655. But then you start going to the 5 minutes time frame. And when you go to the 5 minutes time frame, looking for sales. Now, this is what I used to do before. All right. So I just have to, update this because you have to evolve. Do you understand? I just have to update it so that you can, not fall prey. Do you get? Not take unnecessary losses. All right. The 5 minutes time frame used to hold a lot, but since this year, since the middle of this year, it just doesn't hold as much anymore. So this is what I'm saying. You have a bias on Crash 1000. It's bearish. It has to sell. That's a fact. But then you start going to the 5 minutes time frame and you start seeing sell structures. Or you start going to the 5 minutes time frame. You see sell opportunities, sell structures, and all that. But it turns out that the cells are not holding. We have a sell here, not holding. We had a sell here, not holding. Right? We had a sell here, not holding. Then you see that okay, you are taking like 5 straight losses, 6 straight losses. Why? But you know that the trend is correct. Then you've blown your account, you've blown your capital, first trade, second trade, third, fourth, fifth, 5 times. You take sales because you know you're bearish, but they don't hold. Then price does something like this. The price now comes into a particular, structure. Let's say on the 1 hour time frame, price does this. All right, price comes into a zone like this. Let's say we have this. Yeah, right. Then suddenly, when price came here, what happened? It started tanking to the downside. Then you'd be like, I knew it. I knew this is bearish, but why was it taking me out? I don't know if this has occurred to you recently. It happened to me so many times back in July, August. Yeah. And I was like, what's going on? Why am I taking 4, 5 straight losses? Because I was trading the 5 minutes time frame. All right. I knew the bias was correct, but I was taking unnecessary losses. So if you fall into this category, you need to switch to the 1 hour time frame. The 1 hour time frame has proven reliable and of quality. All right. So you just need to exercise patience for your trade to come to you. You don't need to go after it. Do you get? Let it print out the 1 hour time frame structure, and then you take your trade. All right. Less is more. Do you understand? So Crash 1000 has giving me the bias that is bearish. So all I just have to do is what? Look for a continuation structure. And this looks like what? A continuation structure for me to continue selling the pair to the downside. But here's the trick, yeah? When price comes into your structure, your supposed structure, you don't just want to sell almost immediately like this to the downside. No. Price might surprise you and then just, reverse. So what I do is I make sure I add another confluence, which is what? An extra confirmation for a sell, which is this. Which means when price comes into this new 1 hour time frame structure, it must give me this. New structure on the 1 hour. So you have to wait for it. Now, why am I waiting for it? Because price might decide to do this. Why am I not taking a trade from here? Price might do this, sell all the way here. And then when it sells all the way here, what happens? It has already created a structure. Then price starts going in profit. Then all of a sudden, it starts coming back to your POI, to your entry. And then what? Finally sell. This is where the main sell is. Now, this is what I'm going to share with you all. All right? Because this is how you're going to survive the market now. Do you get? So if you say you don't understand the 1 hour time frame structure, it's simple. Whatever trade you're taking, whatever trend you have, and on a normal day, you're going to take a sell or a buy on the 5 minutes time frame. Just switch from the 5 minutes to the 1 hour time frame. Look for the nearest 1 hour time frame structure that you have. All right. We took a sell on V90S yesterday. Now, why did we take a sell on V90S? It's simple. All right. If you do your top-down analysis correctly, you realize that price are giving us what? The two major factors that must be considered, which are what? Your starting point and your finish point. Your starting point is where price took out what? Liquidity and started moving to its direction. All right. And your finish point is the TP on the higher time frame where price is heading to. Where is price going to? Do you understand? So we had a structure here like this for our starting point. Oh, sorry. This was it. This was the structure, yeah. And this is on the 4 hours time frame. All right. This is on the 4 hours time frame, but I can't open my 4 hours time frame chart. I don't know why. So this was it, right? Price took out liquidity here since on the 8th of September. Then since then, what has it been doing? It has been giving us what? Continuation structures to the downside. Price has to come here. V90 has to come here. The only time we would not be bearish anymore is when price does this to the upside. Do you get when it takes out our protected eye? But until then, we are bearish. So if we go to the 1 hour time frame, so what I do is I do my analysis on the monthly or weekly or daily or the 4 hours. And once I get that, I just go straight to my 1 hour time frame. Now, let me explain about the confluence and the continuation structure. So you can see that price took our liquidity here, right? Price took our liquidity there. And after price took our liquidity, a lot of people would have jumped on this sell. Definitely, a lot of people did jump on this sell. I saw it, but I wasn't interested in getting in on that sell too early. All right. Just like I said, price will sell off, but eventually come back to your entry. Do you understand? So when price took out the liquidity, what did I wait for? I waited for price to give me another structure. Let's take this out so that you can see. I waited for price to give me another structure on the same 1 hour time frame, which was this. Price gave a sweep, a break, liquidity. So this now became my entry. Yeah, like this. Now, this gives you more confidence to go in on your trade. All right, because it has given you a confluence, an extra confluence that says, okay, this is a strong zone, this is a strong key level, so price should hold. So immediately I saw this, I just like, okay, we are going all in on this trade. I increased my risk on this trade because this just gave me more confidence. And then what happened when price came into it? Boom. Now imagine you took a sell from here. You held for days, only for price to come back into your entry again. Fine, you might re-enter, look for another opportunity, but you probably would have put your break even or something, and then price takes you out and then continue to this direction. Now, even after price did this, what did it do? It gave you what? Another opportunity to sell again. This now became what? Liquidity. For those of you that understand the algo market structure, price gave another opportunity. So this became another opportunity for you to re-enter on the 1 hour time frame. Now, mind you, before price got to this point, I'm pretty sure that there were a series of 5 minutes time frame sell structures within these zones. But what would happen? Price will keep taking you out. Loss, 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 loss. They finally tapping into this 1 hour time frame zone. And then when it finally taps in and you're like, you're out of capital, you can't take any more sales, or you are done. You don't want to take a sell on V90s again. Maybe it's bullish. Then what happens next? Boom. Starts going to the downside. No cap, check. I'm pretty sure there was a 5 minutes time frame structure in there. Do you understand? So you need to wait it out. Okay? You need to be patient for your trade to be of quality. All right? It's okay to take 3 trades in a week and having 2 wins, or 3 wins if possible, or 1 win if possible, than taking 10 trades in a day on the 5 minutes time frame, which I used to do, and then taking 6 straight losses. Now, all those losses that you're taking, you can compound that capital to risk on one single trade on the 1 hour time frame. It will pay you more. I don't understand if you understand what I'm saying. I don't know if you get my points, because I'm trying to make a point here. But if you do, please let me know. If you don't, I will go back again and explain it again. Now, we are bearish on V90S. And then V90S gave what? It gave us another structure for a sell recently. Right? It gave us another structure for a sell recently. Look at this. Oh, I really wish this could open the 4 hours time frame, but I don't know why it's stuck. So let me use the 2 hours time frame. Now, on the 4 hours time frame, this was a structure. This was a sell structure. Still not opening. This was a sell structure on the 4 hours time frame. This was a sweep of liquidity. This was a break of structure. This was a 50% retracement. I see no reason why you should be looking for buys. You have no business looking for buys right now. You are bearish. Okay, this is another break of structure. So if you go to the 4 hours time frame, this is an entire structure on its own. So price has given us a new structure to work with. All right. This became a new starting point, and this became what? A new finish point. Correct? So inside this structure, what did price do? The moment I saw that price gave what? Another structure for us on the 1 hour time frame. Inside this new structure, I just knew that this was a very, very solid setup for us to trade with. So we had a break. We already had a sweep, right? This can be considered a sweep as well. And then this is what? A break. So this is now a POI. So what did price do? Price took out the liquidity. And after price took out this liquidity, you can decide to enter here, which is fine, but the supply level was here. I traded with supply and demand. Supply level was here, so I couldn't enter. But what did price do? Price gave us what? A structure to work with here. Gave us liquidity here, gave us a breaker structure here, and then gave us this as a new POI. Right? And inside this POI, we had a supply level around here. I can't remember, but we had a 5-minute supply level there. I'm not teaching supply and demand yet. Soon I will. Okay. So after price did that, this now became the entry for the sell. You can see our price took out the liquidity and then to the downside. All right. Now you might be saying, what of the stop loss is big and all of that. It doesn't really matter because you are working with supply zones and demand zones. So you have more precise entries on your trades. So you get. So V90S has to sell to where? First, it has to come here to this finish point on the 4 hours time frame. And then if it passes that place, where does it go to? All the way down here. So all you just have to do is what? Keep looking for sells, sells, sells. Not on the 5 minutes time frame. Not on the 5 minutes time frame. On the 1 hour time frame. It will save you a lot. Okay? It will save you a lot. Don't worry, I will upload this video on my YouTube and also upload it in the group as well. All right. So if you go to the 5 minutes time frame now, for example, did we have any sell structure? Yes, we did. Now, the normal trader would have taken this sell. This is a good sell. This is a sell that I would have taken personally if I was still trading the 5 minutes time frame. But what would have happened? Loss. Loss. Then price will come here again. Then I'll take another sell here. What would happen? Loss. Loss. Right? Then price would come here again. Look at this. Oh, this is a sell structure, a very beautiful sell structure. Then what would happen? Loss. Loss. Sweet losses. Like these are beautiful losses. For real. You feel me? So I'm speaking from experience, and it's one thing to get mentorship, and it's another thing for you to have your own personal experience. I learned that from my mentor, Dax. When when I finished learning with him, and at some point I was actually making money, yeah. But turned out that I started having some, personal issues with the market, my own personal experience. And I was like, bro, should I be sending you my chart setup so that you can verify or not? He said, no, you will not learn that way. Every trader has different, experience in the market. So you need to learn to figure out what your own problem is, and then you find a solution to it. Do you get? That was how I discovered my problems, and then I found solutions to those problems. Do you understand? So I'm speaking from experience. This used to be one of my major challenges, one of my major problems. Going on the 5 minutes time frame, taking trades, and then losing 6 trades in a row. It was when I lost seven trades in a row. I was like, no, 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 no. This is a problem. This is a problem. And I had to find a solution to it. I had to fix it. Do you get my point? So yes, try to stay away from the 5 minutes time frame and stick to the 1 hour time frame. And you must ensure that your 1 hour time frame is coming from another structure. this is how you reduce your losses, trust me. So yeah, back to our top-down analysis. Let's take any pair of your choice. Let's look at what should we look at? Let's take 15S for example. Let's take 15S for example. This right here is 15S. What do we have for this bad boy right here? Beautiful, beautiful. Someone said V10S, V75, V100, V50. Okay, let's work with what people said. V50. Now, V50, let's do the top-down analysis on V50. So this is the daily time frame on V50. Now, what are the two major factors that must be considered when doing your top-down analysis? Two major factors. Anyone? From what you've learned so far, what are the two major factors that must be considered? If you've been following, beautiful, Emmy, the start and finish. The start and finish points. All right. Your starting point. Now, where is your starting point? Your starting point is the point whereby price took out a major liquidity in your algo market structure, right? On the higher time frame. And on the daily time frame, this is V50. You would see that price started buying from here, right, to the upside. But we are not interested in that. Why? Because we're looking for the points whereby price took out what? A major liquidity. And where was that? Price gave us the sweep of liquidity, yeah? We had the sweep of liquidity, yeah? We had 50% retracement here that gave us what? Liquidity. Then we had a POI like this. And then we had a breakout structure, yeah, like this. All right, we have 7 minutes left. All right, price gave this. And then this became what? Our starting point, and this became what? Our finish point. So we are bearish. So we have a start, and we have what? A finish. Which means price has to sell all the way to this point. All right? So V50 is selling from here to here. It has to come there. All right? It has to come there. But how do we get a continuation entry for this? I just go straight to the 1 hour time frame. Now, let's imagine I go to the 5 minutes time frame first. All right? On the 5 minutes time frame. Let's see how many beautiful losses we would have taken. Let's see. Where it's priced currently. Okay. So this is where price started, retracing, right? So we had a sell, yeah. I don't know how I can adjust this chart again. Okay, we had a sell structure, yeah. All right, we had liquidity, yeah. What happened? We took a perfect loss. Then price came again. Let's see if we can stretch this out better. All right. So, I can't see enough cell structures, but let's keep going. Let's keep going. Let's keep going. Let's keep going. We don't really have cell structures here on the 5 minutes. You can see how noisy it is. How noisy it is. So noisy. You don't want to be caught up in this. Yeah, this one held. Did it? Yeah, I think this one held. But come on, that's how many risk to reward ratio is this? It's not juicy at all. It's not juicy at all. All right. We had this one. This one held. All right. Price to get out a little bit though. But yeah, some of them will play out definitely. But you still take losses. It's normal. Okay. So you can see what it's like on the 5 minutes time frame. You can avoid all of this if you just go to the 1 hour time frame. Just go to the 1 hour time frame. Like it's much more better to be on the 1 hour time frame. That way you can avoid unnecessary losses. Do you get? Now looking at the 1 hour time frame, this right here is what is a structure because this was liquidity, right? This was liquidity. So the thing is this, the moment I spot my structure, I'm not just going to take a sell just because it's inside the structure. What am I going to wait for? Like I said, I go to my 1 hour time frame again, still on the 1 hour time frame. And then what does price do? I wait for price to give me this. This is the confirmation that I need to actually sell this market. And if I don't see this, I'm not interested in it. Do you understand? So that is what I'm waiting for. Now, price did not print any of that here after taking out the liquidity. Now, if you notice, price took out liquidity here, but it did not give us any of that. It didn't give us a structure. So personally, I wouldn't even be in this trade until price gives me what I'm looking out for, which is what? This, and this. And once I see this, then I go for it to the downside. Similar thing happened back in Crash 1000. Price gave a beautiful 1 hour time frame structure. Now, I'm bearish, remember. Price gave a structure for a sell, which is what? This on the 1 hour time frame. Look at this. We had a sweep, we had a break, we have 50% retracement like this. Correct? Liquidity, and then we had a break. Price came, but it did not give me what? A continuation structure on the 1 hour. So I left it. And what happened afterwards? It failed. This way, you can avoid losses. So yes, I always wait for a continuation structure on the 1 hour time frame. That is my confirmation. All right. I do hope you learned something from this. Okay. On the next session that I'm going to be having, I'll be talking about supply and demand. All right. But top-down analysis is a major problem. All right. If you can't find, an edge already, being able to identify buyers in the market, then you have a problem. Okay. So you need to fix that problem first. All right. So what of confirmation structure on the 15 minutes time frame? Nah, it has to be on the 1 hour time frame. All right. It has to be on the 1 hour time frame. All right. Can I take any more questions? We have less than 2 minutes. So I guess that's it. Thanks for coming. Do hope you learned something from this and you apply it to your trading. And I do hope it helps you as well. All right. Pairs to trade. I trade all pairs. All pairs that gives me, what I'm looking out for in the market. I trade all of them. All right. So I'll see you all on the other side. Do have an amazing weekend. Okay. How can I join a mentorship? Send a DM. May you have these sessions more. Yeah, I will. Although we have missed you, I missed you guys too as well. So peace, y'all. Signing out. Goodbye.